Good morning, everybody. It's Thursday, October 24th. This is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments, please feel free to drop us a line in the chat area, and we'll be sure to get to it during the show. Overnight markets here, December corn up 3 3/4 at 422 3/4. November soybeans were up 12.5 at 1010, and December Chicago wheat was up 3/4 at 579 1/4. This morning, we had the USDA announced some export sales, 227,600 metric tons of corn to Japan for 24, 165,000 metric tons of corn to unknown destinations for 24, and 198,000 metric tons of soybeans to unknown for 24. We also had weekly export sales announced, real solid week for corn and beans. It was expected given all these announcements that we've seen. Corn came back 3,602,600. That was above the top end of the estimates. Soybeans were 2,151,700. That was also towards the upper end of the range for the estimates. Wheat came back 532,900. That was in line, and meal was at the lower end at 159,900. We are through 17 of 23 settlements for the harvest price discovery period for crop insurance. Corn is currently at 417, while soybeans are at 1011. Good morning, guys. It was expected. Everybody was talking in the trade that we were going to see a big export sales week here, and also more announcements this morning. So, Dustin, maybe a few thoughts to get us rolling this morning, and then we'll throw it around the room.
Yeah, Dan. Yes, obviously, still very competitive. Seeing all these sales come through, we're seeing all the cues from that. We're seeing markets rising again, spreads rising again. Corn back above 420, beans back above 10. And we've got some rain coming too next week. So river probably gets a little bit of a reprieve from that, just where we're expecting to see that in the 14-day. So all pretty positive. It's good to see.
Very good. Ben, what's on your mind this morning?
Yeah, I think that as we get towards the last part of harvest here, I still think that there's some logistical issues to bringing this whole crop in. And I think the growers kind of caught at this point watching a good rally and still poor basis. Even though basis is starting to creep higher, it's not, it doesn't create the kind of cash price that they would like to have to pull it back out of their bins. Now, I know there's quite a bit that has to still come in, but that's going to be in areas probably more to the north. But, as basis starts to creep higher, maybe we'll see a little bit more of those replacement bushels headed back into the elevators that are being shipped out right now. So it's a tricky spot. I think that there's a lot to be made up from a really poor basis if you're looking at it from a cash price. And also if people went into DP, which I think you would be shocked after talking with some commercials yesterday, how many bushels were actually put on DP. So my concern here is that this is something that from here, I think we're going to have to see a continued week over week demand. We need to see this, and we need to see it stay. Our chart has been not shown a lot of light above 424 for the last 4 months. And we're kind of I think we're getting to sort of a critical juncture here. You throw a soybean option expiration on with thousands and thousands and thousands of puts above the market, can everyone get paid? And the answer to that in options is normally no.
Yeah, just in the last couple sessions, we've seen another big jump in corn open interest. We were almost 20,000 higher on this morning's report. So I guess what's your overriding opinion just as we, grind into the last part of the week?
Yeah, I mean, we're obviously doing a lot of business here. My comment on the basis levels would be it's not the same everywhere. I think, in the East for sure, Ben. If you look at Illinois, it's actually been really good. So we've had really good basis. We've had a lot of demand going via rail. St. Louis area up to Northern Illinois, down to Texas and probably Mexico with these purchases. So there are some good areas that were, kind of non-seasonally very strong, especially with record crops coming out. So if you are in those areas, especially with, basis being so strong, spreads really narrowing, even more incentive. I think that's the market's job. It doesn't give you a lot of incentive to store. So you've got to fight kind of this fast harvest, ideal conditions with dry corn where you don't have to dry it. You can just stick it in a bin. But at some point, the price and the cost of carrying that at high interest rates, which we still have relatively, high operating loans and interest rates, you kind of lose that incentive, so if you get these really good basis pushes, it's probably worth selling into it and re-owning some other way versus just holding the commodity in your bin, in my opinion. So heard a lot of stories about bagging systems going on, any way to find room for storage. I think, Ben, you talked about, areas up in the Northwest putting in old abandoned mines. So, I mean, we're harvesting at a record pace and a record crop. So we're putting a lot of ground piles in. We're finding ways to put it away and then see what happens. It's positive either way to see this kind of demand right now. It's what you need to turn the market. But I agree with Ben on the fact that there's still a decent amount of risk in between here and end of the year at some point here. Hopefully we continue to see good demand. I'm sure there's some fear before the election, as prices turn it, if a lot of buyers were hand to mouth, it makes sense that we're trying to get caught up on some, stuff that they know they need, especially when we're the cheapest in the world, all those kinds of things right now. So everything makes a lot of sense. I just think trying to take advantage of what's changed in the last 30 days. And in a lot of cases, it's figuring out your storage cost to carry and just what makes the most sense dollars wise to try to participate the way you want in this market going forward.
That's very good. Boy, it'd be awesome to fast forward 12 days and get this thing out of the way.
Yeah.
I think we're all on pins and needles here. Very good. Anything else, guys, on the grain side? I know there's not much fresh this morning outside of real good sales.
I will say, I've been the, oil guy, but world oil, veg oil market's been on fire. A lot of, increasing stories, with Malaysia, Philippines, just a lot of different areas that are, either putting export bans in place for veg oils. Palm oil is making, really good moves right here, taking out, months and months worth of highs. So I do think that story with biofuels, all those things we've talked about for months and months and months. Obviously, we've brought in a huge amount of used cooking oil into this country, to the tune of billions and billions of pounds. So maybe we're turning the corner there. We do have really good crush margins. So there are quite a bit of positives, and we talked about this, I think, last week. As you fast forward into Q1, you've got to prove, a lot. Here we had, big acres, record yields, and like corn carryouts kind of flat, a little bit up, but not what you would think if you were, penciling in a 183 type yield. So, you do have to have if Ukraine production is going to be down, you're going to have to prove a big safrinha crop again to make the world corn balance sheet not look pretty friendly. So that's why we talk so much about spreads. One of the reasons that, if you're looking at your total farm risk, multi-year risk, which Dustin talks about a lot, you've got really narrow spreads. Well, if you've got a record production, you've got a big known there that you could take risk off the table. If you fast forward, D's 25 or, forward, we don't know anything about that. We don't even know our final cost yet. We have no idea on production. We have no idea on South American production. So the uncertainty is out forward. And that's why I think it's, when we talk about where do you want to use your dollars to protect risk, I think that's really important to factor in. You don't want to get to a point where we've seen it happen a lot too, where you have these rallies. You had a lot of revenue because you found extra bushels and had flat price rallies and had these opportunities. You don't want to give those away. So you kind of want to, decide where you want to remove risk. So I think that's an important thing to keep in mind here, especially with crop insurance expiring and no new crop insurance till next March.
That's right. Yeah, you're 74% basically. After today, you'll be 74% locked in on this deal. So it's going to take quite a bit to move the needle now at this point. I mean, you're kind of where you're going to be at this stage.
Yep.
And as always, anybody who wants to visit about their individual operations or how some of these things fit in for you, don't hesitate to reach out, info@agyield.com. Rylan, feels like cattle is kind of trying to figure this McDonald's deal out. Is it onions? Is it meat? What's the deal there? And hogs just keep grinding higher, man.
Yeah,
Real good.
real good. Yeah, overall, I was actually surprised we didn't get more of a reaction out of the McDonald's story, but overall, just kind of seems like so the slivered onions are going to likely be the culprit. I would imagine at this point, CDC seems to be leaning in that direction as well, but it's still an ongoing investigation, so it's hard to say definitively what exactly it is. So, I mean, the market's going to stay and wait at this point. But right now, we haven't seen any cash market. Beef prices were mixed overnight, so just overall, just I think there's going to be maybe just a little bit of caution here. I think everybody wants to stay on the friendly side on the cash market here, but we are likely to see some kind of repositioning before the report. So on feed, inventory is expected at 99.8, placements at 95.6, and marketing's at 101.6 for this report tomorrow. So we'll be trading that on Monday. So overall, it seems like we're going to try to price in some of those expectations today and maybe into tomorrow. So we saw the export report come out, and it was pretty firm as far as beef sales goes, 16,700 metric tons. South Korea and China were the big buyers. So it feels like as long as China's here supporting the market, the demand bulls are just going to keep on supporting this at this point. So we're still holding above kind of intermediate near-term moving averages. So all systems go right now. And same thing in the hogs. New contract highs yesterday, just completely kind of surprised everybody, I think, with that. But we've been heading in that direction. Cash has been pretty firm here. We were up 73 cents yesterday. Cork cutout was 98.22. That was up 95. And you really just can't find a bad story in hogs. Export sales were a little bit disappointing, but we'll see. Maybe the market shakes this off. So 22,200 metric tons. Once again, Mexico was the big buyer, and China was a close second. So overall, just the demand story is still really firm. And I think overall, there could be a little bit of a tighter supply narrative going on just based on this kind of new recent demand. So we'll see how it shapes up. But right now, trend is your friend. And it kind of feels like hogs may be looking to capitulate at some point, but I think it's too early to call it top.
Well, it's just to add to that, we talked a lot this year about how weak China demand was, their economy struggling, all these different things. And I believe I saw the, year ending the end of September. So if you look at October of 23 through September of 24, I think their bean imports were a record 117 million tons. So up pretty big year over year. So, maybe demand is better out of China than we've been giving credit. We've been hearing stories about how bad it is for, seems like, better part of a year.
Right. Seems like it's accumulating a lot more and faster than one would expect, just based on a lot of those headlines that we've heard for past couple of months. But I think at least the stimulus, probably real to some degree. It just seems like we got one version of it, and the reality may be something different.
Yeah, at least on the commodity demand side, they've been pretty strong. So even if they're
absolutely
empty buildings need to be addressed, the real estate bubble and things like that. But from the commodity standpoint, it seems like they've been pretty robust. Unfortunately, most of it's been out of South America, but still, it's a positive.
I agree.
Yeah, you have a small hiccup over there in South America, we become the backup, and that's a whole nother game, right?
I think you need a pretty good hiccup probably, just because they're producing so much there. But when demand's really ramping up at these lower prices, it really helps to put more impetus on their production for sure.
All right, very good, guys. A couple things to point out. Ryland mentioned that we will have cattle on feed out tomorrow afternoon, 2:00 Central. Ryland will have a breakdown in his afternoon commentaries, and then we'll talk about it Monday in the War Room. It also is Friday, so we will have Fun Fact Friday. Be sure to tune in. You never know what you're going to get with Fun Fact Friday. We appreciate everybody that tunes in on a daily basis. If you wouldn't mind, throw us a like or subscribe. Certainly helps us, and it'll keep you posted on everything AgYield when the shows are coming on. So all things AgYield. Once again, thanks to everybody that supports the show. Every day that the markets are open, we're streaming live on X, Facebook Live, and YouTube Live, 8:15 Central Time. We'll get one more rundown of the markets here as we just opened. December corn now up 4 1/4, 4.23 3/4. November beans are up 14 3/4 at 10.12. And December Chicago wheat's up 2 1/4 at 581.5 is the last. Hope everybody has a great day. We look forward to talking to everybody again tomorrow.
The War Room is proudly presented by AgYield. For over 50 years, the AgYield team has provided grain marketing and risk management solutions for growers across the country. Our veteran consultants harness cutting-edge technologies to pinpoint risk, optimize market performance, and protect your farm's profitability. Discover a new approach to farm revenue management at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.